Hello traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for April 14th, 2019. Happy Masters Sunday to you guys and gals. I'm immersed into the Masters golf tournament, and I know some of you probably are as well. So it's always an exciting time. And for those of you that are Game of Thrones fans like myself, tonight's an exciting night. I know that's not everybody, but that's a big portion of the public. So for those of you that are, hey, congratulations, we finally made it. All right, with all that being said, let's get to what's really important. Well, first of all, if you haven't tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days. $1 for 10 days. Try it out. And once you try it, make sure you download the mobile application. And once you have done that, you'll get all of our analysis, our updates, support and resistance level breaches, important breakouts with certain charts. You'll get it all on your your mobile device, because as traders, especially in the currency market, when the market's open 24 hours a day, we're not in front of our computers 24 hours a day. So to have this analysis right on your mobile device, it's important, because I know for me personally, when I'm at soccer games with my son, or a baseball game, or just living life outside and away from my computer, it's hard for me to do analysis on my phone with my trading platform. So to get a chart with analysis, it's very important to me, and I know it's going to be important for you guys and gals as well. So make sure you download the app when you're trying out ForexAnalytix. Okay, so with that being said, let's get to what's happening. Well, as you guys and gals probably already know, we continue to consolidate, and I wanted you to take a real quick look at just our overview page before we move on. You'll notice that these currency pairs, especially if you go to basic technical analysis, you're going to notice all of the yellow lights. That means that it's neutral. The basic technical analysis is neutral for most of them. Now you can see as we get into the peso and the yen, there are red and green, which I'm going to get to those in a moment. But for the most part, things are still sideways. And so what we can do as traders waiting for breakouts is we have to just really note where the breakout points are. Now, there are some events happening this next week that could push us towards the upper or lower ends of our ranges, but also keep in mind it is a short trading week. We do have Easter Sunday coming up next weekend. Speaking of which, the week ahead video will be filmed a little early as a result, but with Good Friday on Friday and Easter weekend coming up, it's going to be a shortened week. There are data points that are being released that could, like I said, move the needle, but what you're seeing here in most of the currency markets is that continued consolidation. Now, when you're looking at the euro dollar, let's note a couple of things. First of all, the euro closed relatively well bid going into the end of the week. If you look at the week, let me go over to the weekly candle really fast. Weekly candle, that's a nice little white or green bullish candle that appeared at the end of the week. Now, we also have a potential double bottom in the euro. So the risk at this stage in the game is if you start seeing a move above the 113.50 level, which is, you'll notice the 618 retracement here at 113.47. That's going to be a big resistance. So I want you guys to write down that 113.50. Really important resistance. Support is obviously 111.80 or 111.70, this double bottom that you're seeing right through here. All right, if we break through the 113.50 level, that could spur a little bit of dollar selling or euro dollar buying. All right, let's go over to the cable. Now the pound, very similar situation. You'll notice that we have a nice triangle, tight triangle formation. You'll notice that also this tightening here is being held up. That resistance is at the 618 retracement, which comes in around 131.20, okay? But the down sloping trend line here comes in around 131.50. So just like you're writing down the resistance, hint, hint, writing down the resistance with your pencil. Do you guys know how to do that? Pencil, paper. I know some of you get so immersed in your computers you forget to like actually take notes and write down this stuff, but it's going to be important as we're in these tight trading ranges. A breakout above 130.150 would be a very bullish event for the cable. Now, knowing that Article 50 has been pushed out for Brexit till October, we have some time in the pound now. You're going to see the cable probably move more on economic data and also with an overall theme of what the dollar is doing in general. So if the dollar is rallying, it's going to show up more in the cable, and it hasn't so much in the past because we were so immersed in the Brexit disaster, you could call it. So now you're probably going to see the cable move more with general dollar strength or weakness. Excuse me, or euro strength or weakness. You could look at it that way as well. All right, let's go over into the Aussie dollar. Now the Aussie had a very strong close on Friday. I know we closed right at this major trend line, but it is a major trend line. What I'd be looking at is the 200-day moving average. It comes in around 72 cents. If the Aussie breaks above 72 cents, you have to start looking for a bullish breakout. We are hopeful that China-US trade negotiations are going to wrap up here in the next couple of weeks. You take that into account, and also the important data that's coming out this week, there's a risk that the Aussie starts to break higher. We have monetary policy meeting minutes on Monday night or Tuesday morning in Australia, but more importantly is we have Australian employment happening Wednesday night or Thursday morning in Australia. So this 200-day moving average around the 72 cent level is going to be a major resistance for the Aussie. And like I said, we close on a fairly positive note with the Aussie dollar. I think the risk is for a higher move. Now, once the China-US trade deal gets done, or in essence agreed to in principle, and we know there's a US-China trade deal coming, I do think that the Australian dollar is going to be a short after a significant rally following some sort of announcement. So, where could that take us? I don't know, 73 cents, 74 cents, 75 cents, 76 cents. I don't know, but I do think that the Australian US dollar is at risk of a continued rally near term. All right, let's take a look at the Kiwi, which is also very similar range bound, but the Kiwi has been trading heavy. You should all realize that the Kiwi is not trading that well. That has been because the market is now starting to look at New Zealand as and the RBNZ as a candidate for future rate cuts, where the market was pricing in rate hikes just a couple of weeks ago. So the Kiwi continues to trade heavy, and I think that the Australian-New Zealand currency pair as a result, which I have been discussing for the last couple of weeks, will continue to be bullish, and that's a completely different other story. But just realize that the Kiwi is trading heavy, and we're flirting with the 200-day moving average. A move below 67 cents would be a fairly bearish event for the Kiwi dollar. But if the Aussie breaks higher, if the Euro breaks higher, guess what? The Kiwi is going to be dragged higher. By its pigtails, yes, but it can move higher. So I don't think you should be comfortably short the Kiwi right now, knowing where the Euro's at, knowing where the Aussie is at. All right, another pair that I think that we should be focused a little bit on is the Canadian dollar. The dollar Canadian, has been in a pretty tight trading range, and you can see this triangle also really developing here in the dollar CAD, okay? Which, if we have dollar strength, if for some reason the Aussie fails, the Euro starts to move lower and breaks below 112, the Canadian, has actually held up relatively well. A move above let's just call it like 134.50. That would be a pretty bullish event for the dollar Canadian. I've told the guys and gals in our ForexAnalytix members chat, our exclusive chat room that we have, that I spend 12 hours a day in that chat room with our traders. I've told everybody there that the Canadian's holding up really well. If for some reason we do get dollar strength, and especially if we get some crude oil weakness, which, by the way, crude is flirting with a major 618 retracement, a major fib retracement, which I can also show you here in a moment. If the dollar strengthens and crude sells off, the dollar Canadian is where I'd want to be for dollar longs. Okay, and I'm not in it. I'm not trading it yet. I'm just trying to point out it has held up very well despite the dollar looking a little softer against most other major currencies. So we do have a nice little triangle pattern formed here, and I think a break below 132.80 right here, okay, will push the pair back towards 130. I do believe that, because we are in a consolidation. I just have to note that it is holding up relatively well. All right, one other currency I want to talk about is the US dollar Mexican peso. Well, actually, I'm going to talk a couple more actually. The US dollar Mexican peso, look at the daily and weekly close of this currency pair. It closed extremely weak. One of the things that I'm worried about with the US dollar Mexican peso is that the market, speculative market, is getting fairly aggressively long the peso, which means that the speculative market is looking for a weaker exchange rate in the dollar mex. The risk to the dollar Mexican peso going higher is there in the event that equities sell off for whatever reason, but equities look actually pretty strong. It looks like we might actually hit all-time highs, which will continue to keep the downside pressure on the US dollar Mexican peso. But speculative positioning is a little high, and that does concern me. It gets me a little worried because everybody's on the same side of the trade, and when everybody's on the same side of the trade, that's usually a recipe for disaster. But at the same time, we must note that this is a pretty big consolidation for the dollar Mexican peso, and a move below like 1865 or so could really kick off some sort of, and I don't like to use this term that often, but it could set off some sort of capitulative, that's not even a word, a capitulation, but some sort of capitulation type of move where anybody else that was left long, just liquidates their position, and next thing you know, we're trading down at 18. But I think dips down towards 1820 are going to be bought up, and that's one of the risks I think near term with the dollar Mexican peso. We see lower levels near term, but then get scooped up for a possible move higher, weeks from now, not necessarily next week. But what I want you guys to note is the 1870 support, 1865 support. Those are going to be pretty important levels for the dollar Mexican peso. All right, last couple of pairs I want to talk about as well. The dollar yen, very bullish move in the dollar yen. Surprisingly, I have been watching the dollar yen squeeze higher, and we are at risk of a break above like 112. I think it's 112.20 is this resistance here, roughly. Squeeze above there could really start to open the doors towards 113, 114, and really back up towards, you look at the weekly, resistance of 115. All these resistance levels between the 114.50, 114.80, up all the way up to 115. That's like an upside air pocket there. So meaning that the dollar yen could continue to squeeze higher, and one of the risks I believe to the dollar yen right now to a move higher is the S&P. I mean, if you look at the S&P, the market is probably priced for perfection, but as we inch our way towards a China-US trade deal, as long as it still looks like the wheels haven't fallen off the bus regarding a trade deal, the market probably will continue to grind higher. And the higher we grind up here towards, the 3,000 mark in the S&P, especially, towards this, the all-time highs up here around the 2920, 2930 level, the risks of an upside squeeze where anybody who is short just finally throws in the towel and says, you know what, screw it, I don't want to be short anymore. That risk is increasing. And a move above, these all-time highs could really start to squeeze the market. And as a result, we could see continued yen weakness or dollar yen strength. And last but not least, we were talking about the Aussie breaking higher, right? We discussed the Aussie US dollar breaking higher. Well, the US dollar Japanese yen is also breaking higher. Then, look at the Aussie yen. The Aussie yen is above the 200-day moving average. We've broken out of this range that we've been in for months, and we're at new highs for the year in the Aussie yen. We could continue to squeeze higher in the Aussie yen as risk appetite improves, stocks continue to push higher, and if a proper like short squeeze in the S&P, and here's the S&P here, if a proper short squeeze in the S&P occurs and we see something that looks like this, let me get rid of this magnet, we see something that looks like that, yeah, what do you think is going to happen in the Aussie yen? The Aussie yen could be easily trading at 81 yen, 82, 83, okay? It's quite possible, and those are the things that I think the risk is to higher prices in assets. And once a China-U.S. trade deal is announced, if it gets announced, I think there's going to be probably some significant buying coming into risk assets, stocks, selling of yen, selling of dollars, and that could last for a few days, maybe a week past an announcement being announced. So those, I think, are the risks. Remember, we are range bound in the markets, and we are in fairly tight trading ranges. Now for next week, I had mentioned about the Australian data coming up next week. We also have some employment data coming out of the UK Tuesday morning. Again, with Brexit so close, or pushed out further, the market is going to start looking at UK data a little bit more carefully, the economic data. So we do have employment data on Tuesday with the UK. New Zealand has, on Tuesday afternoon or early Wednesday morning in New Zealand, we have inflation data. We have China GDP Tuesday night for us here in the US. For if you live in China, it's obviously early in the morning. On Wednesday, we have UK CPI, we have Canadian CPI and trade balance, and then, like I mentioned earlier, we have employment data out of Australia Wednesday night or Thursday morning in Australia. On Thursday, what's really important on Thursday morning is going to be the German. We have German PMIs. Now, remember, German data has looked incredibly weak this last month. A lot of those PMIs have slipped below 50, which is now in contraction territory. Not expansionary, it's contractionary numbers. If those numbers stabilize a little bit, that could give the euro a bit of a boost on Thursday morning. Also, we have UK retail sales, and then we have US and Canadian retail sales on Thursday, and that will wrap us up for, you know what, one last chart I should point out. That'll wrap us up for the week as we head into Good Friday and a long holiday weekend. But the dollar, actually, let's go to the weekly chart here. This is better seen on the weekly chart on ForexAnalytix. The weekly dollar index, we're in a wedge. It's a bullish wedge because we have consistent highs and higher lows, But just because it's a bullish wedge does not mean we have to have a bullish breakout. It's just the risk is, or the percentage, the probabilities of a move higher in a bullish wedge are obviously a higher percentage for a bullish side breakout, lower percentage for a lower breakout, but that doesn't mean we can't move lower. And the fact of the matter is if the dollar index breaks below 96, that's problematic for dollar bulls. The flip side to that is if the dollar index breaks 98 finally, or 97.80, because that's really the resistance up here, that's going to be a pretty bullish breakout. But you can see the dollar index is obviously wound up really tight. So guys and gals, if you found this video heading into next week beneficial to you, and and you liked it, please hit a thumbs up if you're watching us on YouTube, and make sure you subscribe to our channel, so this way you don't miss any of the great interviews that we have throughout the course of the week. We had some great ones. We had Macro Hedged. Last week we had Adam Button came in and filled in from Forex Live. We had a good 30-minute interview with him, and we have great interviews all the time. So if you don't want to miss any of those, make sure you subscribe to our channel. And I hope you have a great week and a great shortened week. My name is Blake Morrow with ForexAnalytix. This has been your week ahead video. We'll see you on the FACE webinar tomorrow morning. Have a great day, and enjoy Game of Thrones and the Masters today. Thanks a lot.